I think, now's a good price, if anything. Like, we're a bit under the power law. As we speak, the price is $87,000. Power law trend line right now is probably like 115, 120,000. So we're actually below power law trend line. So if anything, now is a good time to be accumulating. He's probably just, thinking now's a good time to accumulate. I want to get these Bitcoin now while they're easier to get than in the future when they're harder to get.
How many chairs are you sitting on right now?
Hi, everyone, and welcome to One Chair. We had the pleasure of hosting Stephan Livera. Stephan is an icon in the Bitcoin space. He is the host of the Stephan Livera Podcast, and he's an advisor to OranjeBTC, the biggest Bitcoin treasury company in Brazil and LATAM. We had a great conversation with Stephan about Oranje, strategy, the whole corporate Bitcoin treasury space, and much more. So with that, here's our conversation with Stephan. Hi, Stephan. Welcome to OneShare. We're super excited to have you on today.
Hi, Eve. Thanks for having me.
So we've been following you for quite some time, and obviously listening to a lot of your podcast episodes, but you're always the host. And I realized that I might not know your full origin story. So maybe we can start there. Can you briefly tell us how you got into Bitcoin and as a second step into the Bitcoin treasury space?
So I was already a libertarian, already into Austrian economics, already against fiat money, and I was relatively tech savvy. So you can say I had certain advantages. But yeah, like most people, the first time you hear about Bitcoin, you disregard it. And then for me, the time I actually took it serious, I basically stumbled across an article in December 2012. And that was my moment. That was like, this is real. I need to read this. And like a lot of people who got into it around that time, they just had this sort of period of going deep down the rabbit holes, trying to like read whatever you can, listen to whatever you can. In those days, it was Andreas Antonopoulos talks, maybe some Trace Mayer, maybe some Tour de Mister, and some of the Nakamoto Institute. And so I bought my first coins in 2013, and I've just been, shouting about Bitcoin from the rooftops since. And then, yeah, on the treasury company stuff, I think my journey there was a little more. Now, I had interviewed Michael Saylor, multiple times and things like this. But as you guys know, it sort of really only took off like a year ago, basically. Like, we're recording this now December 25. It's sort of like December 1 year ago that it really started to ramp. And so I would say early this year, like sort of early to mid of 2025 is when I started to actually more seriously explore this concept of, oh, okay, like a treasury company, this concept of a vehicle that can use equity and debt to get more coins in a way that is, efficient, or can do things like, the point I'm trying to get to is this vehicle, this public company as a vehicle to do things that you and I as individuals could not do. I think that's something that started to become more clear to me. And also this concept of onboarding new people who are not willing or not able to just directly buy Bitcoin. Now, of course, the obvious answer for most people is, hey, why don't you just buy Bitcoin? Why don't you just self-custody Bitcoin? And then even some other people, if they can't do that, oh, why not just buy the ETF? Well, hang on, there's a reason why these treasury companies, I believe, can justify a small premium, not a massive premium, but they can justify some premium to MNAV. And the point is that it will, wax and wane during bull and bear season, obviously with sentiment and so on. Right now, yes, obviously it's in a bit of a lull, but I think it'll come back. And I believe there is a justifiable small premium to 1x MNAV, that you can look at it and understand the case for that. So for me, I started to think more about that and get more into that idea. And along that journey, I became also an advisor and investor in Orange, which is a Bitcoin treasury company in Brazil, the largest in LATAM, and has about 3,720 BTC last I checked. Yeah, I've also obviously been doing interviews with treasury company people as well because I'm interested in it. But like I said, I see my, let's say, role in a way, loosely speaking, is to just cover anything related to Bitcoin, whether it's, Bitcoin mining stuff or protocol or Lightning or, various things in Bitcoin. And that includes treasury companies.
Yeah, no, I think that's great because I think a lot of people that are looking at the Bitcoin treasuries, or there's a lot of Bitcoiners that I can call more or less OGs or that have been in Bitcoin for a long time, they still have this skeptical view of the Bitcoin treasuries, right? And that's also the reason why we started this podcast, because we felt that education was lacking. And obviously, there's a good reason to hold Bitcoin and Bitcoin sold in cold storage. But there's also a good reason why you have those Bitcoin treasuries. And it's great to see you also be part of OrangeBTC, where exactly as you mentioned, you're an advisor. And there, I would like to know a little bit more how exactly you got involved into OrangeBTC and what's your role as an advisor.
Yeah, so the main story there is that I knew Guy from our time together at Swan Bitcoin previously. And so Guy hit me up asking that, did I want to be involved in this? And after sort of doing further research into it, it actually started to make more sense to me of like, yeah, actually, there could be a case for this. Now, of course, the elephant in the room, right? The strategy, obviously they've got, a massive number of, what is it, 671,000 BTC or something, crazy. So I think it's unlikely that people will beat strategy, but can you be the biggest in your local market or in other ways, or can they differentiate in different ways? And also, can there be a role for, let's say, the pure play strategy or pure play financial, engineering side of it, and a role also for the operational Bitcoin treasury companies? I see both can work, right? I think both can be viable. So in terms of my role, I'm just an advisor. Also, as an investor, obviously, I put some money in, and my role is sort of to help advise on things going on in like the Bitcoin land, sometimes like technical things that are happening. And I'll also be assisting with some content and things like that as well to help, because as you said, there's a big educational barrier, and there's a lot of people who, don't understand Bitcoin, step one. And then even if they're into Bitcoin, they don't really get the case for these treasury companies. And so I think there's a role for that. The way I see it is, these treasury companies can be seen as an ally to Bitcoin, right? They are supporting the same Bitcoin network effect. They may be doing things like supporting educational ventures or even Bitcoin programming and Bitcoin open source, like things like that support the ecosystem, that they can assist in that way. So there's different ways that these treasury companies are, I think, helping. And they are, in some ways, they are the ones that can really interface a lot with the institutional investors. Some of them are not able to just directly buy Bitcoin, or some of them are not willing to just directly buy Bitcoin. They may buy, let's say, the common equity of one of these treasury companies, or in the case of like Strategy or Strive, they may look at their preferred shares. And I believe MetaPlanet is also going to be coming out with their own one of that too. So, there's different products and services that, in a way, these treasury companies are offering, whether that's just common equity or these preferred shares, or even people who are, if these treasury companies take out convertible notes or convertible debt, that's also another way that people may get exposure. So I see it as that there's different components of this that can work for different people. I think it's now, obviously, I think just to address the elephant in the room, obviously there was a big hype, right? Like, say mid 2025, massive hype. And so people were sort of, MNAVs were crazy. I think probably people were overpaying on the MNAV, right? I think that's probably the simple answer, is people were overpaying based on where things were. Obviously, your entry price will matter. And of course, these treasury companies are more volatile than Bitcoin itself. So, and the way I see it is, you want to keep most of your Bitcoin exposure in your cold storage, in your multi-sig, this kind of thing. And really, if you're doing treasury company stuff, I see that as, just dabbling, like only a smaller fraction. That's how I think of it. Now, of course, other people will have different views on that. There are some people who are like, no, it's the other way around. Or some people who are like all in on the treasury companies and they don't even have Bitcoin. I disagree with that view. I think you should hold Bitcoin first and foremost. And treasury companies are sort of like a dabbling, and where maybe your entry price really matters more. Like, I think if you're getting in on a low MNAV, right, like we are now, like even now, if you're just buying some of these common equities, I think there's a better chance of success. But the caveat would be, not all of them will succeed, right? Because there are ways that they can fail. Maybe they can take on bad terms on their debt. Maybe their debt is not structured in a way that's good for them, like it's not long-term debt. there are all kinds of problems that can come up if it's not done well. So it's not kind of a blanket, every single one of these will succeed. Sure, some will fail, some will make mistakes. But at the same time, I think some of these will outperform Bitcoin, um, at least in the financial NGU sense. Of course, as everyone knows, there's benefits of holding Bitcoin in self-custody that are not just financial NGU.
I think that's greatly put, because that's what we've been also advocating here in the podcast. Is I think your savings account is Bitcoin, right? So that's your core asset that you want to hold in cold storage. And then if you want to go down the risk curve, then you go into those Bitcoin treasuries, and all have a different risk reward aspect. So for example, strategy would be a bit more de-risked through the amount of Bitcoin that they have, the balance sheet that they've created, and then maybe you have your meta planets, and then maybe you go even further down with some other Bitcoin treasuries. Not all those Bitcoin treasuries will succeed. So we've seen that the community is a bit split in that aspect, and there's some that say, oh, it's a winner take most, and then there's probably those that say, yeah, there's 5,000 banks. And I don't know how many insurance companies, and they provide more or less the same service. But probably the Bitcoin treasuries will differentiate. And I'd be curious to know your take, how you see this evolving a bit more on the Bitcoin treasury side.
I mean, I think on the operational side, like if you just are an operational company sweeping cash flows into Bitcoin, obviously, if implied in our worldview, if you're a Bitcoin maxi and you think Bitcoin is going to be global money, then every company is going to at least do that part of it. The question is, which companies and how many will be doing let's say, the financial engineering aspect of it? That's probably a smaller amount. I think that's more like a winner takes most. And strategy is likely to be the global winner, but there will be winners in big capital markets. So if you are the biggest in your particular capital market, then I think you have an edge, you have an advantage, because you obviously have the strongest balance sheet. And so I think for the pure plays, it's going to be winner take most, and kind of, like a power law Pareto sort of thing, where like the top few get most of the rewards. And that will apply at the global level and also at the, let's say, regional and local jurisdiction level. And so, yes, some of these treasury companies can try to cross-list in other jurisdictions, and they can try to launch products in other jurisdictions, but there will just be natural advantages, whether that is legal and regulatory, or maybe like a cultural and social advantage of like Brian Brookshire talks about this concept of like the hometown hero, right? Like if you're from that country and let's say the leaders and the management team are seen as from that country, like in the case of Orange with, Brazilian leadership and management teams, it's seen as, it's a Brazilian company. It's with Brazilian people trying to raise the profile of Bitcoin in the region. And so that's also going to have a factor, right? I think so. All of these things will play into it. Obviously, having a very well-known, charismatic, like a Michael Saylor or a Jack Mallers or a Dylan Leclerc or a Simon Gerovich, like obviously having people who are very well-known and going out on these podcasts and media, obviously that's important, that matters, right? Marketing matters, but it's a combination of things, right? It may be that aspect of it and also having capital markets expertise and experience. So things like, do you have management teams who have prior public company experience? So as an example, Orange's CFO previously has taken a company public and has public markets experience. So it's a matter of these things, and that will matter in terms of how you manage the company, and are you able to raise funds? Are you able to raise capital? Are you able to go out and pitch to institutional pools of capital, whether that's on the debt side or on the equity side, and pitch them on, hey, investing in a Bitcoin treasury company. So I think there's all these different ways that they will all try to differentiate from each other as well. Like as a quick example, even like Strive in the US, they have no debt. So that's maybe that's a differentiating factor. Maybe someone else will try to be like, no, we have this operational company that's throwing off cash flows that we're buying Bitcoin with that. I think there'll just be different ways that people try to differentiate themselves. That can be by jurisdiction, that can be by, what actions they are undertaking. And we'll just have to sort of see how it all shakes out. I think, yeah, it's seen as like it's like the whole sector is in kind of a down at the moment, because most of basically all the treasury companies are down from their high. At least their common stock equity is down from their high. But you know, I think if you've been around Bitcoin, you've seen this before. You've been here, you've seen this movie before. I think when the cycle turns back, which I believe it will, then it'll MNAS will go back up again. Maybe not as crazy as they did last time, but I think they will still go up. And so we're just gonna we're gonna be playing these kind of up and down cycles all the way until hyper Bitcoinization.
And yeah, exactly. So as you mentioned, there's right now a low, but if you look at it from a Bitcoin perspective, some of these companies still have more Bitcoin than they used to back when they had the highs. So obviously, it always depends a bit how you see it on an angle, if it's fiat perspective or Bitcoin perspective, right? Like Strategy right now is holding much more Bitcoin than they did back a year ago when they were having their highs. So,
Right. I think their high was, off the top of my head, something like $543, something in that range, right? That was like their high maybe a year ago. But they have way more coins, BTC, now than they did at that time, right? They've got like, what is it, 670,000 coins. At that time, I can't remember the exact number, but it might have been 300,000 or 350,000 coins that they had. So they've got way more coins. And so, the next time we get kind of a Bitcoin bull run, and I think there's obviously a very strong relation, right? So if Bitcoin is in a bull run, then all the treasury companies, I will expect those to also, to pump even harder than Bitcoin does. And so that's part of the leverage factor or amplification factor. So some of these companies, most of them have some form of debt, and they're able to access cheaper forms of debt than you and I can as individuals. And as part of that, they use that debt to buy Bitcoin. And I believe that is part of what justifies the multiple greater than one. But of course, there'll be fluctuations, and, there are times where it'll get out of whack. It'll be too far high or too far low.
exactly. And maybe coming back to OranjeBTC, so you mentioned exactly how the play could evolve in some Bitcoin treasuries, and looking, for example, at preferreds. Is there a roadmap that you already have for Oranje?
So I don't have a lot I can share there. I think it's something that the team are always looking at, but nothing like concrete to say, yeah, this is, coming soon sort of thing. So I think it's, everyone's looking at it, right? Everyone's thinking about it. Like, yeah, is there an opportunity to do preferreds? But I think it's about the right timing, the right conditions, and probably having a big enough Bitcoin stack, and kind of, yeah, having enough. I think the other aspect of it is having enough liquidity in your common stock also, because obviously Strategy is kind of the lead player here, and they've been around the longest and have the most liquid stock. After that, it really drops off a lot. So that's also a factor that has to, improve. And I believe it will improve over time as more people start to learn about this, first about Bitcoin, and also about Bitcoin treasury companies.
Sticking on OranjeBTC, because you guys are still, or OranjeBTC is still accumulating, I would say, quite a nice amount of Bitcoin, even during the Q4 2025. And would you think that's because you guys entered at an opportune time, or what's differentiating the strategy there? Because we've seen even Bitcoin treasuries that are selling Bitcoin. So you guys are obviously doing quite well.
I think it just comes down to structure and timing. Now, the time Orange came out live was I think it was early mid-November, right? So it's not, maybe October, but it wasn't. I think the timing of it was already kind of a lull for a lot of the treasury companies. And yeah, I think it's just a factor of like the timing that it came out. And also I would say, I think structuring as well. Like I think what we've seen with some of the treasury companies is that maybe they took out too much debt, or their leverage ratio, went too high, or maybe the terms weren't so great. So then they had to sort of try to get out of those convertible notes that they were in. So I think that's probably driving some of what's happened. I think in some cases it's just maybe exuberance, or they sort of took money that came with strings attached. I think for the most part, like some of these companies, they meant well, or but in some cases maybe they were trying to take fast money or they made honest mistakes in kind of structuring or how things played out. Because I think maybe people were, let's say, surprised by this pullback and drawdown right now, that maybe most people thought, oh, there was more left to go in this, and it felt like it all ended faster than what they thought it would. So some of that just remains to be seen, right? Like, are we going to see kind of faster Bitcoin Treasury cycles inside of the broader Bitcoin cycle? Who knows, right? None of us really knows, but it seems that way. It seems that they were having these kind of spurts and drops faster than the broader Bitcoin bull and bear market was, going. So maybe that's one aspect of it. Maybe another aspect of it is just the structuring. It's like, as long as your debt is far enough out, like a 5-year term, as an example, that's probably better. But it is kind of a balance of like, there's probably a sweet spot there that, as an example, for some people, having debt is it's part of the business case. It's part of the model, right? That if you just don't have any debt, then maybe for some investors, they see that as like, well, hang on, where am I getting my leverage from then? Right now, of course, there's different ways to think about that. So, of course, there's like Strive with zero debt, but they're going to try to get amplification through their preferred strategy. I believe also, like Michael and the team have said, they're trying to get rid of those convertible notes over time so that they can then also have no debt and just achieve amplification through the preferred shares only. Yeah, I guess it depends on who you talk to, which investor. That investor may have a preference. They may see it like, well, yeah, take out that debt when you can get good terms. Maybe that's the other way to think of it. Like, it's not just about kind of having debt or not. It's more about like, what are the terms that you can get? And at certain times in the cycle, you may get better offers than otherwise, right? So maybe at the really bad time, you're not going to get great terms on it, or it's going to be very restrictive covenants. Whereas in the kind of up season, hype season, maybe you're going to get better terms. And then in that case, it does make more sense to take out these convertible notes and other forms of debt so that you can buy more Bitcoin, because obviously you're bullish.
Michael Saylor has warned many times about taking the easy money, because the easy money is the toxic money. He mentioned, I think, in his last, was it Q3 2025 earnings call?
I think so, yeah.
So yeah, and before that as well. Just coming back one last time to OranjeBTC is you guys have proof of reserves, and not many companies do that. So I think that's an interesting aspect to it. And I would like to know your thoughts about proof of reserves, because exactly strategy, for example, is not coming out and it's been obviously advocated for. So what are your thoughts there?
Yeah, so I mean, it's a hard thing. It's not always like I obviously, as a maxi or whatever, like generally speaking, ideologically, we like the idea of proof of reserves because it helps make sure, maybe it's a differentiating factor for some companies. But I also, to be fair, I'm also aware, and I'm also, let's say, sympathetic to the position of, look, there are times where there's other security risks, security trade-offs that go with that. That, as an example, let's say if you're a treasury company with public proof of reserves, or if you disclose your addresses, can that dox investors' coins when they go in, right? Is that also a factor too? So there's elements of that you have to think through. And there are elements also of, could your activities on chain be seen, or at least at your custodian level, could that be seen and sort of front run? I think there are fair considerations around it on both sides. It's not just kind of a black or white consideration, but I think longer term, I think it is going to go towards the proof of reserves. And maybe there are ways to do cryptographic forms of that without necessarily disclosing your actual addresses. So we'll see. Or maybe using like third-party providers who are doing that, like in the same way that, these are public companies, they're being audited and so on, they're regulated, they have to do all these disclosures, they have to do all this reporting. That's just it's the nature of the beast, right? Like, it just comes with the territory that if you want to play in this market, that's what it takes. So I'm sympathetic to both sides of that proof of reserves question.
I see both sides as well. And I think over time anyways, I think the investors will also, with new ways of of doing things like you mentioned. And I think the investors will also value the proof of reserves concept. Switching a little bit gears here, you were at Bitcoin Mina recently. Did you manage to catch Michael Saylor's keynote there?
Yeah, I was watching that. I think it's interesting shift. It's an interesting shift in the narrative. He seems to be almost pitching this concept of a money account that uses, let's say, Stretch STRC as like a big portion of it, and would that allow people to have almost like a different form of the stablecoin? It's an interesting idea. I don't know. We'll see. If it gets adoption, it's hard to say. Because on one side of it, maybe it's just seen as a bridge too far for some of these nation states or other banks that maybe they're not ready yet to have that conversation yet. Even though there is a lot of excitement around stablecoins in various jurisdictions around the world. Obviously, the US had this Genius Act signed recently. So there's a lot of talk around stablecoins over there in the US. I think there are others who are, I don't know, just kind of lukewarm on it, or even the reaction I was sort of seeing from other people in the audience at the time was like, whoa, this is really complex, right? Because Michael at that Bitcoin Mina talk in Abu Dhabi was sort of going into a lot of technical detail. And I think, of course, his goal is to educate and get more people to learn about Bitcoin Treasury companies and the different structures here. But I think depending on if you are sort of knee deep into the weeds of like Treasury company stuff, you could have followed it. But if you weren't, if you were just like an everyday Bitcoiner, it might have been a bit hard to follow. So that's probably one thing where it's just early, we're just early in all this stuff. And so, like you said, there's a lot of Bitcoiners who see that they don't really see the point of this. To be fair to them, they're not the target market, right? Like if you are just kind of like, I just want to hold my coins in self-custody, the Treasury company stuff is not really your target market. Like you are not in their target audience, let's say. Whereas for other people, it can make sense. Like if you're an older person and you have a fiat buffer, maybe it would make sense for you to use some of these preferred shares as part of your overall strategy. Whereas maybe, for someone who's younger, maybe you just want the risk. You just want to hold the Bitcoin yourself, as opposed to these, let's say, de-risked forms of preferred shares that exist out there. So I think bringing it back to this kind of money token or money that could be built on top of Stretch, let's say. Yeah, I don't have a strong view, to be honest.
Yeah, so I'm still also processing it because, as you mentioned, it's a bit complex. And we had Ed Julien recently in the podcast, and he said something that I thought was interesting, is that we've orange pilled more or less everybody that can be orange pilled. So we're leaving this early adopters phase and we're moving into the broadband phase. And that's where the Bitcoin treasuries come in and potentially have more adopters of Bitcoin one way or another. And the money aspect, or the digital money aspect, also makes sense, because then it broadens even more this range, right? So I think there could be more potential people that adopt this. However, because of the layers of complexity, I'm also on the other fence where I'm thinking, wait, are we going back to a kind of fiat standard? Because that's how the gold standard started, right? You're backing everything with gold, but then you're redeeming it for this, and you have this layered money that starts to get a bit complex, and we're getting away from the actual Bitcoin. So I don't know, maybe you have also thoughts there.
Yeah. I mean, and people were also making these same arguments around the strategy, around strategies USD reserve, right? Like it's kind of ironic now that, this journey started for Michael and for MicroStrategy back in 2020, and they had, I can't remember the exact amount, but it was like $400 million or $500 million worth of what they viewed as a melting ice cube. And the idea was put it all into Bitcoin. And now, ironically, they now have more than that in fiat, like 2.1 billion-ish in USD, but obviously a lot more Bitcoin, 670,000 Bitcoin now. But my read on that is I think it's just a pragmatic step to give confidence to the fiat institutions and fiat investors. They see it, and the S&P and these other credit rating agencies, they see it as, well, if you're going to pay out these dollar obligations, maybe you need to have dollar reserves. And so I understand it could seem sort of hypocritical or not a purist view, but I think he's just trying to hack Bitcoin treasury companies into the fiat system. And as part of that, it's sort of maybe they're seeing this is the price to be paid to get it in there. And the point is to win a lot more capital into Bitcoin longer term. So it's sort of like a short-term pain for long-term gain kind of situation. So I'm still supportive of the idea. I think it makes sense. I think it's a pragmatic step, even though, yeah, hypothetically, from a purist standpoint, you could say, why aren't you just buying more Bitcoin, right? Like, I thought the idea was just to buy more Bitcoin. But I think it makes sense in his broader strategy. So we'll see what happens with that. But I think that is going to work out, and I think there will be more people who come into the preferreds as a result of having more. But the challenge could also be then, well, hang on, as the preferreds grows, does that mean you now need to keep a larger and larger USD reserve? Open question, right? I don't know. So uh, I understand it's not a purist thing, but at the same time, we're trying to get more people into Bitcoin and get more people exposed to Bitcoin. So I think it's worth a shot.
Yeah, I think it depends on balance in the end. Does it make sense? And I think it depends if you look at it short term or long term, right? Because in the short term, what strategy is doing right now, they just issued, what is it, 750 million of common stock to buy dollars. And this is dilutive, right, in Bitcoin per share for shareholders if you look at it on a week basis. But on the other hand, they're de-risking their preferreds and probably increasing demand for them in the mid to long term. And then with that, they'll be able to accumulate more Bitcoin. But
Exactly. So it comes down to how accretive you think the preferreds will be, because theoretically, the preferreds are very, very accretive to, just overall business, to their whole business model. So I'm sympathetic to the idea that, if he's able to use this to get a lot more investment in the preferreds, that will be extremely accretive to the common shareholders, because they'll be able to, effectively get this very high amplification level. Because, like, if you just look at the kind of the general assumptions of like where you think Bitcoin is going. Now, Michael has his, what's it called? Bitcoin 24 model. I think he put that out a year or two ago. Whether you're looking at that or power law or something, the point is it matters if you get more Bitcoin now, because you get to enjoy the compounding over the next few years. And Bitcoin is over the next, if we're all bullish on Bitcoin, which we all are, then it makes sense to get that Bitcoin now and have it compound on your balance sheet now, while your fiat obligation is just set in fiat yield nominal terms, and it's not compounding the same way Bitcoin is compounding. So it can make sense. It's just a question of, how much investment into the preferreds they will be able to get.
Currently, it doesn't seem to be working out in the short term, right? Because the preferreds, the price didn't really do anything with the announcement of the reserve, or now even the expansion of the reserve. Though those instruments are flat to down. They seem to be still trading more with Bitcoin or strategy than what.
I think it's a medium-term journey of education there, because ultimately, I think a lot of people just don't know about this stuff. I'll give you another little factoid. While I was in Hong Kong for Bitcoin Asia, I gave a talk at a smaller private event for family offices. All right, I was teaching them about Bitcoin. In this room, I would estimate maybe 35 or 40 individuals from high net worth offices in Hong Kong. So these are basically, everyone there is ultra high net worth, or they work in a family office for ultra high net worth people. I asked them, hey, did you know about strategy? Do you know about MetaPlanet? Yeah, most of them put their hands up. They knew that. But I asked them, did you know about the preferreds? Basically, no one knew about that. And this is a room of ultra high net worth people in Hong Kong who were not aware about some of these preferreds even in August. So if you don't even know these things exist, it's hard to sort of expect there to be like a lot of money coming in to buy these things. So I just see it as, it's just early. Like, I understand for people like us, we're kind of in this echo chamber. We're kind of eating, sleeping, and breathing Bitcoin and talking about Bitcoin treasury things. But normal people, they've got a business or something else to run. They've got their career, they've got their job, they've got their family, they've got all these other things going on. They're not necessarily like researching and reading, oh, okay, Stretch and Strike and Saylor and Orange and MSTR, and they're not so deep into this world like we are. So I think sadly it's just going to take some time for it to get out there. But there is a lot of bullish news just on Bitcoin in general, and so I am bullish. It just takes time to get through and to sort of pierce through normal understanding on things.
That's a great insight to have. And on that, maybe a bit of speculation. What are your thoughts on Saylor has been accumulating, well, his reserve, but he also accumulated a lot of Bitcoin over the last few weeks, $1 billion a week. Do you think he knows something?
Right, yeah. So this is like the meme on X. I was like, so what does Saylor know? He knows something. I mean, maybe. It's not like I've asked him, hey, do you know something? And he might not be able to tell us even if he did, right? But my guess is he's like us. He wants to get as much Bitcoin as he can. I think whether there's like something that he knows or not, I think he just wants to stack more Bitcoin now. I think, now's a good price, if anything. Like, we're a bit under the power law. As we speak, the price is $87,000. Power law trend line right now is probably like 115, 120,000. So we're actually below power law trend line. So if anything, now is a good time to be accumulating. He's probably just, thinking now's a good time to accumulate. I want to get these Bitcoin now while they're easier to get than in the future when they're harder to get. And it seems like he was able to use a lot of equity ATM, common stock ATM, without like massive dilution, or at least without massive drop in the MNAV, to be clear. And so I think he has a very liquid instrument. He has a very liquid market for his shares. So he probably saw this as like, well, this is a great opportunity for me to, turn on the gas while most of my competition is not able to turn on the gas, right? Because they're just the competitors to strategy are simply not as large, not as seasoned, not as liquid. That's just the bottom line. And so I think he sees it like, well, I can get these coins now. Let's do it now. Because coming back to what we were saying before, you want to have those Bitcoin on your balance sheet so that you can experience the compounding factor over time. And so I think it just makes sense whether he knows something or not.
Yeah, I tend to agree as well, because here I think it's also a lot of people are saying, oh yeah, but they had this framework to see, we below 2.5 MNAV, we do this, maybe
right.
above
but
4 MNAV.
They pretty quickly pivoted from that, right? Like, I think he sort of came out with that guidance, but that was like during the hype season, and then the hype sort of fell, and then it was sort of like, no, well, just use it at your discretion, I guess. Now, yes, there's a level of trust you're placing that he's going to do the right thing for the common shareholders, but I mean, that's part of the assessment you have to make of Michael and the team and what they're doing, and sort of what are they doing on a medium and long-term basis, even if short-term it is not kind of creating the immediate result that everyone would like. It's a medium and long-term thing.
And I think everybody's too fixated on the short term, and that's why we get all these narratives and all this FUD and everything. But if you start looking at all the steps that they're taking on the long term play, it just makes sense. I mean, we all know Bitcoin's going higher, so you might as well just accumulate as much as you can. And the people are always saying, oh yeah, Saylor's always buying the top. That's probably one of the first times where he'll be buying the bottom. So they should be happy as well.
Yeah, and I mean, as the famous kind of quote he has is he's going to be buying the top forever, right? But if you look at back at, the Saylor tracker or these different things, I mean, he was consistently buying through the bear cycle. Maybe the last bear cycle, maybe not as much, like he was, but just not as frequent. Whereas now there's kind of an engine, and he's kind of doing it every week. So I think that's also part of credibility. And I think even with Orange, it's sort of showing that you're showing up and regularly trying to accumulate, and that gives confidence for these investors. And another example, even with the preferreds, is for people to see that, yes, he is regularly paying out the dividends on them, right? Because that also helps people get more confident about it. And then over time, you build up a track record of, oh, hey, Strategy have been paying out their dividends for X number of years. Why would they stop now? Oh, okay, now it's more now I feel more confident to actually invest into those. And so I think it's the same kind of idea, that it's a seasoning thing, that is, once you've been out there and you've been operating with a proven track record for some time, it's easier now for people to put some trust into you. Now, of course, in Bitcoin, there's a trade-off around trust. Of course, if you don't trust, then yeah, hold in your multi-sig and don't even do treasury companies at all. But there's certain levels or shades of trust that can be applied here. And part of our modern world requires some of those shades of trust. So I see it as this is good for Bitcoin. Overall, it's going to attract more capital in.
And in all of those coins that they keep accumulating as well, they're just going to be stuck there. These are not coming out because they have such a strong balance sheet. You know that these are not moving anymore. That leads me basically to the next question: is what do you think of the market in 2026 now, with strategy being obviously the strongest player out there, but there's also still a lot of inflows into IBIT on the BlackRock ETFs and so on. So and we have a really strong setup as well on the macro landscape. So do you have any thoughts there?
I'm a ADIQ permabull, right? So I'm always looking for reasons that it should go up, to be honest. But yeah, I think a lot of people were disappointed by the returns in 2025 for Bitcoin. Of course, yeah, okay, gold had a big run. Other things, had their run. It doesn't always work out that way. But I think I'm a fan of power law, and we're below the power law now. So to me, I think we're likely to get back back to the trend line or above the trend line, probably early or mid next year. I could see that happen. And so I think some of it turns on things like the broader macro. People look at whatever ISM and the macro cycle and things like that. Will that turn around? And has that up until now coincided with the 4-year cycle, making us think, oh, it was a 4-year cycle, but actually it was just like macro things happening. So, I think those are all tailwinds kind of blowing in our favor. Or another example is a lot of these big institutions. We're seeing so much interesting news out of these too. So even Bank of America is coming out saying 1 to 4% allocation to Bitcoin. Vanguard recently turned around after being against Bitcoin ETFs. Now they're allowing, I think they have 11 trillion AUM and 50 million customers who can now buy Bitcoin. We're seeing more and more of these different services offer things like Revolut and Trust Wallet did a deal or a partnership now where I think customers of Revolut can buy directly to self-custody in their Trust Wallet, right? So that's a cool example. Or even on the MOE side of things, right? Square, and they're turning on up to 4 million merchants. In South Africa, there's Money Badger, who have turned on 700,000 locations where you can pay Lightning. All these circular economies around the world, whether it's El Zonte or Lugano in Switzerland, there's all this positive news coming around Bitcoin. I think it's just a matter of time. People will just keep chipping away. And so, there's this factor of people might be familiar with the Jordi Visser article that was famous about the Bitcoin's IPO moment, right? I think it's just kind of a handing of the baton, because I think a lot of these OGs, these OG whales and people who are selling larger chunks, they probably didn't have the opportunity to do that up until recently. And so that's what it is. And so it's just passing the baton. There's a new round of hodlers who are either coming in, whether they are individuals or companies or nation states. Even that's another interesting factor, right? The Czech National Bank bought some Bitcoin. Luxembourg bought some Bitcoin. Some Abu Dhabi sovereign wealth funds have been buying IBIT. And, it's known that there are a lot of these nation states now who are starting to engage in Bitcoin mining. There's all this positive news for Bitcoin. It's only a matter of time that until the sellers get exhausted, macro turns around, maybe Trump gets what he wants. Everyone knows Trump wants low rates and he wants a very, dovish Fed governor. And so he's likely to get what he wants. And so, yeah, I think rates will come down. They'll start doing some kind of some forms of stimulus and some forms of money printing or QE, or maybe they won't call it QE, but it'll be called something else, whatever, doesn't matter. But the point is the Federal Reserve balance sheet going to expand? Yeah, I believe it is likely to. And actually just recently they stopped quantitative tightening and they started, I think, about $40 billion worth of asset purchases per month. Right now, that's small in the grand scheme of things for them, for their balance sheet size. They see that as not as QE, but more like a technical thing. But they've started this program now. Now that they've started it, it's very easy to expand that up, right? So instead of 40 billion per month, what if they go to 200 billion a month or 500 billion a month or whatever? I think there's all these things going on around the world. Even Japan, the whole thing with Japan, are they going to start doing more stimulus, or are they going to start looking at money printing also? So I just think it's a matter of, hodling on and keep on accumulating. Of course, you have to structure your life and be ready for both scenarios, right? It could be a bear as well, but I think that's a smaller probability in my mind of next year being a bear market. I think the bigger probability is, we go up, right? Yeah. So my guess, we kind of sideways grind for a little while, and then keep going up later. But you just have to be ready for both scenarios. So you can't just sort of go all in on one particular side of it, whether you're a bull or a bear. Just sort of be ready for both scenarios and, keep on accumulating.
I think a lot of people are very bullish for next year. And actually, that's what gets me a little bit frightened, because I always have this contrarian view on many things. So if everybody's
Yeah.
thinking one thing, I'm thinking, oh, that's probably not good.
But I will say the fear and greed index, it was recently as low as 11. Right now, as I look at it for Bitcoin, I think it's 24, which is like still in the fear range. So, we are in this little echo chamber of, perma bulls. Most of the market is seeing it as fear and bear market, and that's probably how most people are seeing it. So rest assured, we're not going with consensus here.
Yeah, that's true. That we're so much stuck into our echo chamber. But the moment you step out of X and you go into the real world, anywhere really, nobody's talking about it, or everybody's saying, no, this thing is going down. So that's very true. Stephan, is there anything else that we haven't touched on that you think would be valuable to the listeners?
No, I think just try to make sure you're staying up to date. Obviously, get in your hashtag 40 HPW, 40 hours of Bitcoin podcast per week. I understand at times like this, when it's in a lull, it feels like, people are laughing at you, or, the meme in Bitcoin over the years has been this kind of 3 years of you look like an idiot, and then 1 year you look like a genius, right? Like that's historically been how it kind of plays out. But really, there is fundamental growth underlying all this stuff, right? Things like all the L2s, we're seeing more excitement and building around that too. Make sure you're staying up to date on all these different things, whether it's treasury companies or protocol stuff, L2s, Bitcoin mining, whatever it is. I try to cover it on my podcast, so listeners can check it out, Stephan Livera Podcast. And thanks for having me.
How many chairs are you sitting on right now?